I asked AI one simple question. If you had to invest your own money in 2026, what would you do? I expected it to spit out a list of hot stocks, trending cryptocurrencies, and maybe a few fancy words that sound smart but don't actually help anyone. Instead, it gave me an answer I wasn't expecting. It didn't tell me what would make me rich. It told me why most people stay poor. And honestly, I haven't looked at investing the same way since. Because here's the strange thing. Every year, millions of people ask, what's the best investment? Almost nobody asks, what's the smartest way to think about investing? That tiny difference changes everything. Let's be honest for a second. If you opened YouTube right now and searched best investments for 2026, you'd probably find hundreds of videos with bright red arrows, shocked faces, and titles claiming they know the next company that's going to explode. One creator says artificial intelligence stocks are the future. Another says real estate is dead. Someone else tells you to buy gold before it's too late. Then another person says Bitcoin is going to $1 million. After watching enough of these videos, you don't feel smarter. You feel confused. And that's exactly why I decided to ask AI. Not because I think AI knows the future. It doesn't. Nobody does. I wanted to know something different. If an AI could study thousands of books, decades of market history, and millions of opinions in just a few seconds, what patterns would it notice that humans usually miss? Its answer wasn't exciting. It was much better than exciting. It was surprisingly boring. And boring, as it turns out, is often where wealth is built. Here's something most people never realize. People don't usually make bad investments because they're unintelligent. They make bad investments because they're emotional. Think about the last time everyone around you was talking about one investment. Maybe it was crypto, maybe it was AI stocks, maybe it was real estate. Suddenly your social media feed is full of success stories. Your coworker says he doubled his money. Your cousin starts acting like Warren Buffett after making one lucky trade. Even your barber somehow has stock market advice. At that point, your brain starts whispering something dangerous. What if I'm missing out? That sentence has probably emptied more bank accounts than almost anything else. Because investing isn't just about numbers, it's about emotions. Imagine walking past a restaurant with a huge line outside. Without even thinking, your brain assumes the food must be amazing. Now imagine the restaurant is completely empty. Even if the food is exactly the same, you suddenly become suspicious. Investing works the same way. When everyone wants something, we assume it must be valuable. When nobody wants it, we assume something is wrong. Our brains were designed to survive in groups, not beat financial markets. That's why AI's first lesson surprised me. It didn't recommend chasing what's popular. It recommended building a system that works even when your emotions don't. That made me stop and think. Maybe the biggest investment isn't finding the next winner. Maybe it's protecting yourself from your own excitement. Then AI shared its first real investment idea. It said if it had to start from zero in 2026, it wouldn't spend weeks trying to find the perfect stock. Instead, it would buy a tiny piece of hundreds of great companies all at once through a broad, low-cost index fund. At first, that sounds incredibly boring. No exciting headlines, no overnight millionaire stories, just steady investing. But imagine owning a fruit shop. Would you rather depend on one apple tree or own an entire orchard with apples, oranges, mangoes, and pears? If one tree has a bad year, the others keep producing. That's exactly what diversification does. You stop betting everything on one idea. Instead, you give yourself hundreds of chances to win. The funny thing is, many beginners think diversification is for people who are scared. In reality, it's often what confident investors choose because they know nobody can predict the future perfectly. Then AI said something I really wasn't expecting. It told me not to invest in AI, at least not the way most people are doing it. Wait, wasn't this supposed to be the year of AI? Here's the difference. Most people invest in whatever is making headlines. Smart investors ask a different question. What makes those headlines possible? Think about the gold rush. Thousands of people searched for gold. Some became rich. Most didn't. But the people selling shovels? They made money no matter who found gold. AI suggested thinking the same way. Instead of chasing every new AI app that becomes popular for 3 months and disappears, look at the businesses building the infrastructure behind AI. The companies making chips, cloud computing, data centers, the software businesses that help other companies use AI more efficiently. The lesson wasn't buy this company. It was much deeper. Invest in long-term demand instead of short-term excitement. That idea stuck with me. Then AI admitted something that honestly made me laugh. It said, "Don't trust AI." At first I thought, wait, didn't I literally ask you for advice? But it explained something important. AI should be your research assistant, not your financial brain. Think about GPS. You use GPS to help you drive. But if your GPS tells you to drive into a lake, you don't. You look around. You use common sense. AI is becoming the same thing for investing. It's amazing at gathering information quickly, comparing companies, explaining financial reports, finding trends, but it can't predict tomorrow. Nobody can. The smartest investors will probably use AI every day. The biggest mistake will be letting AI make every decision. That difference matters. Around this point, I asked AI another question. If you only had one investment that nobody could ever take away from you, what would it be? Its answer surprised me more than anything else. Your skills. Not because they're guaranteed to make you rich, but because they increase the value of every hour you work. Imagine two people. Both save the same amount every month. One earns $50,000 a year forever. The other spends 2 years learning valuable skills, earns promotions, changes jobs, and eventually doubles their income. Who builds wealth faster? Usually the second person. Not because they picked better stocks, because they invested in themselves first. Sometimes the highest return investment doesn't exist inside a brokerage account. It exists inside your own brain. That's something I never really appreciated until now. Then AI brought up something almost nobody enjoys talking about. Cash. Most people think cash is lazy money. If it isn't invested, it's wasting time. But AI looked at it differently. It called cash opportunity money. Imagine your dream laptop suddenly goes on sale for half price. If you have cash, you smile. If you don't, you scroll past and say, maybe next time. Investing works exactly the same way. Market crashes feel terrifying when you have no cash. They feel like opportunities when you're prepared. That completely changed how I thought about emergency savings. It's not just protection, it's flexibility, and flexibility has value. Next, AI said something that sounded almost too simple. Invest every month, no matter what. Seriously? That's it? No secret formula? No magical timing strategy? No, because here's the problem with waiting for the perfect moment. There usually isn't one. Imagine waiting for the perfect weather before starting a morning walk. Too hot, too cold, too windy, too rainy. Months pass. You never start. Investing is similar. People spend years waiting for the perfect market. Meanwhile, people who simply invested consistently kept building wealth. Consistency quietly beats perfection, again and again. Then came another lesson I didn't expect. Ignore the daily news. Now, that's hard. Because financial news is designed to make you feel like everything is urgent. Markets crash. Markets recover. Interest rates change. Some billionaire tweets something. Suddenly, everyone acts like the world is ending. Here's the funny part. If you planted a tree in your backyard, would you dig it up every morning to check if the roots are growing? Of course not. You'd water it. Give it sunlight. Wait. Investing works the same way. Checking your portfolio every hour doesn't make it grow faster. It usually just makes you more anxious. Sometimes doing less is actually doing more. Finally, I asked AI one last question. What separates people who quietly become wealthy from everyone else? Its answer was only one sentence. They make fewer emotional decisions. That's it. Not higher IQ. Not secret information. Not luck. They simply create systems that stop emotions from taking control. Automatic investing, diversification, and ban emergency savings, long-term thinking, continuous learning. None of those ideas sound exciting. But neither does brushing your teeth. The magic isn't in doing something extraordinary once. It's in doing ordinary things consistently for years. And that's where most people struggle. Because we naturally want exciting stories. We want to believe someone has discovered a shortcut. We want the next big thing. The hidden stock. The secret crypto. The AI that predicts tomorrow's market. But wealth has never really cared about excitement. It rewards patience far more often than intelligence. Looking back, the most valuable thing AI gave me wasn't a list of investments. It gave me a different way to think. Instead of asking, what's going to make me rich? I started asking, what habits make people wealthy? Those are completely different questions. One depends on predicting the future. The other depends on controlling yourself. And if there's one lesson I'll take into 2026, it's this. The best investment isn't the one that gets the most attention. It's the one you'll still be happy owning 10 years from now. Because markets will change. Technology will change. AI will definitely change. But discipline, patience, and good decisions never go out of style. So if you were hoping this video would reveal a secret stock that's guaranteed to make you millions, I'm sorry to disappoint you. But if it helped you think about investing in a completely different way, then maybe that's worth even more. Because the people who build lasting wealth usually don't have better predictions. They have better habits. And those habits compound just like money does. If you enjoyed this video and it made you see investing from a new perspective, make sure to subscribe. Because on this channel, we're not just talking about how to grow your money, we're learning how to think about it differently. Until next time, take care of your future self.